Hello, my name is Ekana Anyagafu with the Two Wolves Mindset. Today, we're going to be talking about types of accounts. In our previous conversations in understanding your money, we've talked about things like budget, debt, and emergency savings. But now let's talk about that next step. Okay, you've started to put some money away. What are the types of accounts that you can even put money away into? Lucky for you, I'm here to explain. So essentially, accounts go into three types of categories: taxable, tax-free, or tax-deferred. Taxable essentially means that you put your money in, and whether it's interest or growth because it's invested in capital gains, that you're essentially going to be taxed at the time that you sell or dispose of that property or whatever that investment is. And so essentially, just like a bank, you put your money in, at the end of the year, they give you an interest sheet or a 1099, and then you go file that for your taxes. Or if you have a brokerage account, same thing, same type of principle for that taxable, same with trust. Now, if you were to compare that to a tax-free account, that personally my favorite, this is a Roth IRA, a Roth 401k. Those are accounts that you essentially put money in. You don't get a tax benefit immediately, but then when you take the money out of it, it comes out tax-free. Other accounts that are a little bit different, but still hold the tax-free effect, are going to be accounts like a 529. You put your money in, it grows, you take it out for a college or really education expense, and boom, that comes out tax-free. Also, a HSA account. This is another version of a tax-free account. You put your money in, it grows, and then essentially when you take it out and you spend it now for doctors or, preventative healthcare services, things like that, that money comes out tax-free. To me, this is the best type of accounts because if you put in $10 and you can get out 20 without any taxes, that is a win. The third type of account, and is actually probably one of the more popular ones, especially if you ever had a 401k, is a tax-deferred account. Essentially, you put your money in, immediately you do get a tax break. The IRS says, hey, you put $10 in, we'll take $10 off of your income. Now, the catch with this is that now it grows, what we call tax-deferred, and at an age, normally 72, or it's increasing, but about 72 right now, you start to have to take money out in something called a required minimum distribution. For a long time, Roths are actually still fairly new if you were to look at the scope of kind of investments, and so they're still kind of catching up. But for a long time, the tax deferred was the tried and true. I personally really like the tax-free. If you're able to put money in and it grows to tax-free, that's really just hard to beat. Peter Thiel once put a small amount of a company that wasn't necessarily public yet into a self-directed IRA. That company went public, and so he essentially was able to get over $1 billion tax-free. Now, obviously, you would say, well, heck, that's kind of a unique case, absolutely, but it still gets to emphasize a little bit of just how much this can really benefit you. Again, like, share, and subscribe, and follow along if you want to keep up.